What are the differences in types of trading that you would give to an individual trader or an institutional trader?
Well, first of all, I've done an awful lot of training at both levels. And quite honestly, there's not a great deal of difference. I do 3-day trading courses for all of the big banks in London and in Johannesburg for years, and there's not a great deal of difference. So I would start them off with a fairly simple mechanical plan of finding a trend and buying a pullback in the trend, as simple as that. Especially at the banks, I tend to get classes that are filled up with CFAs, and that's a really potent qualification. I don't know if you've seen the exams for that, but it's quite scary. They tend to have a belief that technical analysis is like reading the tea leaves. So when I introduce the Fibonacci patterns and whatever, the guys are just shaking their head. That's what the 3-day course ends with. So pretty much teach what I've just talked about. At the institutional level, most of the people, there's not a great deal of proprietary trading going on. Maybe if Mr. Trump reverses the regulations in the US, that will change. But there's not a great deal of proprietary trading going on. So most of the people will be trading flow, i.e. making the spread. That's quite a different world. So
can an individual then be as successful as an institutional trader?
Yes, of course they can, and quite easily, and they're trading much smaller positions as well. I think that it comes back to information and self-awareness. The institutional trader will have access to a great deal of fundamentals in the stock market, for example, that maybe retail traders won't have. And that's where my product VectorVest fills the hole, and then it gives the retail trader institutional level information to act upon. So the 2 legs to be successful: quality information and self-awareness. Once you've got the quality information, then self-awareness is the key to be able to keep your mind in this moment, to focus on perfect execution of this one trade over and over again. I have many good friends who are professional sportsmen these days, and they spend a great deal of time focusing, golfers for example, focusing on perfect execution of this one stroke. Not the last stroke, not the next stroke, but this stroke. Who's that chap from here who drives the Formula One car? Jason Button, no?
Yeah, Jensen, yeah.
Yeah, when he's in his little red car, if it is red, I don't watch it. He's totally in the moment. Not the last moment, not the next moment. He's totally and utterly there. If you focus on that, and it takes normally at the retail level quite a bit of money lost before you realize that that's important, then you can beat the pants off a city trader. I think at a retail level, if you can manage 10 to 12 shares well, there's little point in having any more than that. Certainly when you get to the institution level or Neil Woodford level, they will have 50 or 60 shares plus in that portfolio. But remember, they've got a room full of analysts, in fact, managing those. At VectorVest, we always say you want to buy the very best shares that you can, that are rising when the general market is rising, and then you want to manage them well. Okay, we have a tool to manage them well. That can be done sort of by looking at the shares, or we can actually set that up in a thing called the Genius, which will automatically tell you when there's some action to be taken. Maybe a share's got to a target level, maybe a share is at a stop loss level, so that can be automated. My son goes for the automated method. I'm but of the old hand, I still like to look at the charts.
Are there any times when analysts can be wrong? Are there any times when we should ignore what they're saying?
Well, probably half the time. There's a great deal of randomness out there, I assure you. As I said, in the Forex market, if I can get it right 60% of the time, then I can make good money in the Forex market. With incorporating the fundamentals in the stock market, I can do better than that in terms of hit rate. But I'm still wrong 25% of the time. On the next trade, I don't know whether it's one of the good ones or one of the bad ones. At the level of one trade, the market cannot be predicted.